Good morning, everyone. Microphone check. Screen check. Looks like everything's working correctly here. Good, good, good. Welcome, welcome. Hopefully everyone was able to rest up and get ready for the day ahead. Probably one of the most normal days that that we've seen in a long time in the markets, it feels like. But before we get into that, of course, on the right side of the screen, make sure to read through the Live Trade Room Morning Prep PDF. Very important to go through and understand everything that is inside there. Just a quick note before we jump in. Of course, the YouTube side does have between a 5 and 30-second delay, depending on where you're logging in from, which can definitely impact the timeliness of what I may be talking about at any given moment. Also, just as a side note or a side thing, just want to take a second to give a shout out to our latest members that joined overnight, yesterday, this morning, etc. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you do have a few different options. Jesus, going through puberty again. If you aren't a member yet, you have a few different options. To check out if you're looking to further your trading education, trading career, etc. Here on YouTube, you can check the join button below the stream. YouTube family gains access to the extended trading hours, which goes from 10 until whenever we end up closing up shop. Along with that, every member gains access to the Discord chat server. And of course, you get the awesome badge next to your name to show your support here on YouTube. Plus, it just looks cool. To understand our day trading approach and what it is that we're doing here every day, look no further than the Day Trading Academy. Listen, the Academy isn't something that you're going to be able to whip through in an afternoon. It's not some small PDF guide. You're talking 19 plus hours of course and study material, homework, review, etc. There's a lot of stuff in there, so you best tuck in if you're really going to take it seriously. And then finally, speaking of seriously, the big kahuna, the Mac Daddy, the VIP. VIPs have exclusive permanent access to the non-delayed stream covering the entire morning session to ensure that you're on the fastest connection possible. That way you don't miss anything. Alongside that, VIPs also have access to our monthly webinars. There's another one planned, which should be relatively interesting coming up this month. Private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside with me today, analyzing these crazy markets of ours. Let's take a look at the news, see what's going on today, and kind of gauge, what sort of to expect from today, at least as it stands. Don't forget to grab your morning DP levels; those are posted for you on the Big 7. Might be adding MCL instead there. Honestly, I would love to be able, just a total side tangent, I would love to be able to add all of these in the micro phase if they actually trade enough volume. Like the micro euro. I mean, that's a bit of a stretch. That's pretty teeny tiny, but it fits the bill. And having micro crude on that list, micro gold is, the volume's non-existent. I mean, maybe with all the micro markets, it starts creeping up. We could be the first wave, right? It would be really cool to have the full micro thing across the top. Anyway, don't forget to grab all of them. NASDAQ, S&P, gold, crude, euro, Bitcoin, and Ethereum. They're all there for you. As far as the news is concerned, the only thing we have today is 11 o'clock, and I say it like it's a small thing. We have the Fed monetary policy report coming out at 11 o'clock. A lot of times, these types of announcements end up being a lot like FOMC, where it's like, it's either going to really, really shake things around and cause things to go nuts, or nothing happens, and it's a big buildup for nothing. There's not really any in between. The one concern that I have is that it is a Friday, and typically out of the entirety of any day of the week, Fridays usually have some of the largest days, and those usually end up being to the downside. Well, we're kind of poised on the cliff where we know we're in a troublesome spot already in the indexes, and we'll get to that in a second. But seeing this type of stuff, those are potential sparks. Those are things that can get things moving, and things that we have to kind of keep our eyes on. So maybe it's a flop, maybe it's not. We'll see. 11 o'clock is the news announcement, though. Going through, let's start off on the S&P. We've got that fantastic pullback to the POC. I mean, this is about as textbook as you can get, right? We had the sellers. They've been stuck the whole way up. They've been stuck all the way. And they finally are given a chance to get out at break even. What did they do? They jumped real quick, and they bailed, and the market went screaming back to the upside. So with this rotation back up, realistically, my first thought is, okay, well, is this an ABCD correction? Right? If it is, then we should see something along the lines of a 1-to-1 move, right? Or at least around there. So if we go up 1, down. We should see 1-to-1 lands. Uh-oh. Right there. So this is where my concern starts coming in. Hey, a lot of stuff. How's it going? We've got this really kind of funky going on where we're completing some pretty big objectives. And with these major objectives that we're completing up here with these 1-to-1 corrections, that further kind of adds to the sentiment that it's like, well, wait a minute. Is this going to be that parabolic blow-off where we really see this thing dive a little bit further down and we get that double value pullback? That's what we've been sorely missing for ages. And I know we're talking about how it just had a fantastic bounce off of this POC, but we've got to work our way through this. And that's going to be the big caveat that we're going to have to deal with, is that we're coming into the US session with a lot of the objective kind of done. We've still got some room, but there's not a ton of it. If we're looking back from the top to the bottom as far as volume is concerned, perfect. That works out great. Let me see. Does it fix if I put it to minute? No. All right, whatever. None of that, huh? Man, these volume bugs really drive me nuts. Okay, well, I guess we're going to have to take the whole thing then. I'm going to switch it back to tick, and I'll push the whole thing forward just a bit more. So as far as this move is concerned, we can see where if the market is going to pull back, even if it is a bullish market, which is totally still viable, if it pulls back, obviously, that's what markets do. What a logical spot for the market to pull back to. Rising channel support, that was just drawn up right there. We've got horizontal settlement support coming in to refill that objective, and the POC is smack on top of it. I mean, that's about as perfect of an ABCD completionary move that you could ever see. Even if it does end up being a bull trend, we've got to admit that this is potentially a little bit high right now. That's going to be tough. So I would rather see it dipping back down towards the settlement area at the least, maybe even a nice little trap underneath the lows, to still try to get those bulls to continue to move back up. Over on gold, if we continue this a little bit further forward here, we've got a new high, and that would be the end of the impulse leg at least. That doesn't do anything for the POC, at least at that point in time. The POC is still down at 1757. If we go all the way further forward, they have shifted the POC. Okay, very important information going on here. So, oh, wrong spot. Let me zoom in here. If we have the POC shift, which did happen, actually, let's see, where did it actually take place? On this drive lower, if I remember. Sorry for the motion sickness for everyone that just had to witness all that. We've got, let me go a little further. Is it on that low? Okay. So obviously the data's bugged. That's what it was. I remember this from yesterday. So the data was bugged on this. So I believe that it either happened here, which is doubtable, or here, which makes more sense given that it spent more time there. Either way, we have the POC shift to the downside, and the sellers, this is their objective to take it down if they're going to make a shot. But so far, we haven't seen them show up to the party yet. So if the sellers are going to show up, we've got a pretty early launch pad still, right? It feels like it's still pretty early to the party. That may be detrimental. That might mean that it has to come back up and retest some of these highs. But realistically speaking, if the sellers are going to take it, this is the spot. This is what they need to have if they're going to take it. We'll see if they can line up. Over on crude oil, we've got a nice continuation off the lows. The numbers, again, anticipated to be bullish, and well, we are seeing some movement up. There are a few other things that are going on with crude as well. Crude has the introduction of the micro in markets. Well, as we've seen with the induction of a lot of other micro markets, at least on bigger ones, right? Micro gold and micro euro is kind of non-existent for now, at least. But the micro NASDAQ, I mean, that's plotting more volume per day than the S&P Mini. So those are significant shifts in what's going on in the atmosphere that's happening here. And just from a kind of like, hey, this might see a lot more interest. We might be seeing just a lift based on kind of hope. Like, hey, cool, crude oil might be coming back, right? So have the introduction of the micro markets, that definitely helps. We might have that be a big aid in what's going on here. Not to mention that this is a very obvious three-legged move down, although I still would have really loved to get that three-press wedge low. That would have been fantastic. No. Oh, well. Over on the euro, the euro is still way, way down here. As far as a wedge is concerned, they are holding it at the lows. Like we were talking about yesterday, we're waiting for the highs. They've got to break above the top. They are trying to right now. This is the actual break above those highs that they're trying to get things going. So as far as the break is concerned, this is where things are expected to get going. Now, breakout pullback, that might be the case. There could be a lot of different things, and we can gauge what may be happening here from the volume. The volume. Have they changed it yet? That's going to be the big first question. Because the Euro's had that POC stuck up at the top forever. Have they changed it yet? They haven't yet. So there's still no POC shift. So even if this does go back up, I have to assume that it's going to be resistance up there. There's a lot of open space here too. Man, if they break above that 1.2, there's nothing. Until what? 1.21 almost. Holy cow. The Euro's got some serious distance. Over on Bitcoin, mostly sideways. Nice little potential for a flag. It could be a flag break down that's looking for a little bit more momentum lower. Definitely the case right now because of the fact that we do have lower highs. 3 very obvious lower highs in the near term. Although that hasn't necessarily stopped the market before. If you zoom out a little bit, it obviously has been in this range for quite a while. But the fact that we have these 3 lower highs stacking up and now we're piercing down to new lows and the market staying relatively resistant on this area, it makes pretty good sense to see at least one more leg down on Bitcoin. Not necessarily a new low. The thing doesn't have to collapse all the way down, through the floor. But it would make sense to see a retest back into like the 31,500s or, Bitcoin, if it flushes the bottom, 31, would be great. Those are areas of a lot of interest for a couple reasons. Buyers can buy in with almost no risk. The risk is below the lows, but the reward is all the way back up to highs. And I'm not talking like highs in the 35s. That's the near-term objective, but it could go all the way back up to 60,000. So the reward is incredibly high for the risk. And a lot of traders know that. So they're jumping into these areas, but you're seeing them mess around. And as soon as it starts breaking lower, they don't hang out because they know that the risk reward is broken. They've got to get out and they've got to give it another shot later on. So we've got this really kind of herky-jerky back and forth move, but the bears are feeling like they're trying to get this party going. At least down for a little bit lower. Over on Ethereum, Ethereum has a big old slide to the downside off of the top 2400, slid all the way down to now 2133s. We're hovering back into a previous major congestion zone, right? This is where the sellers tried the last time around with a very obvious attempt. So if we go from the top to the bottom, sorry, my kids are home with me today, so you'll deal with the home base issues. If we look at the overall movement, my data's bugged again. Really? Let me creep it forward. We can see that the POC of this structure is right around the 2100, at least as far as Coinbase is concerned. And that's where we're seeing a lot of the support being demonstrated. So buyers may be trying to re-up their position. My concern is how aggressively bearish of a leg down this was. Is this just going to go sideways and continue on? So if this is going to correct back up, it's got to be aggressive. And the reward versus risk, once again, makes a lot of sense here. A little bit less so for Ethereum because it's been kind of grinding higher, but there's still a ton of room. So they're both looking pretty good. It's just they've got to go and not hang out here too long. Looking over on the U.S. session, this is probably the most normal trading environment that we've come in for, what, like weeks? I mean, really, this feels like it's just another day. No, there's nothing crazy going on. We've got the Euro session hovering around the Asian session. It's stacked. Whoa, what happened, So let's first off look back on the daily chart. And looking at the daily chart, we can see that we do have a very nice, once I can actually zoom in so we can see it, we've got a nice little pullback bar. And, well, I say little, that's a pretty big drop. If we look at the top to bottom from this pullback, this is a 2.3% pullback. Again, categorizing some of the other pullbacks, that was a 1.73%. If we go down here, that was a 2.3%. if we go here, that was a 2.26. And if we go here, no, that's not the one I wanted. If we go here, that was 3.6. And that was the one before the whole move started. So it's fairly obvious what's going on down here. Once it started getting into the 2% down to 2.3, swing traders were like, yes, please. Right? That's why we were talking about such aggressive like options and all of these things way out of the money's long, because this is a major zone. But it's a major zone in the short term. It's only a 2% pullback. If we're looking for a double value pullback, we know that that doesn't start until around 3.6 and potentially doubling this up 4.6. So if this is going to continue lower and we see a little bit further down, the next objective would be about a 4.6% pullback, but at least 3.6, which puts us roughly around 14,345. That's another 400 points to the downside. It's not out of the norm to see the NASDAQ put in 400-point moves, especially when the morning's consolidated. So that is something that we have to kind of keep in mind. If the bottom starts breaking out here, there might not be much to hold it up until we start getting down into those double value zones. At the moment, they're holding a 2.3% value pullback. At the moment. Pop that over there. Let's look at the 60-minute. We've got our doubling up of the volume, and we, geez, oh, geez, look at the volume that came up there at that doubling up. That's nuts. Obviously, a lot of volume taking place, but they weren't able to achieve anything, right? Look at, obviously, this is going higher, but look at it from the perspective of the shorts who are potentially stuck, right? If they're stuck in this move, which a lot of traders will be betting against a massively overextensive move to the upside in the markets. I talk about it all the time. I'm not about to be the first one to the party, and this is why, right? You get a lot of sellers who are trying to get that rotation to the downside. Now, logically, this would be a low probability scenario. Stops would be above, targets would be down. That's a very wide target versus a stop, therefore you're a swing trader. The probability can't be good in those types of scenarios. But that doesn't mean that traders won't try to, they won't try to hold on to it and get it going. And when it starts breaking above that, that's where we start looking at it like, well, wait a minute, are they trapped? When the market starts rotating down, it doesn't quite make it down to the POC, doesn't quite make it, big drive down, doesn't quite make it. We've got more volume building up here. I mean, you can see that they're stuck and running for the hills on this move to the upside. So when I see big jumps in volume like this, and look at it in terms of size, the market barely spent any time there, but the volume that was traded there rivaled the POC volume by, what, 10%? That was a metric ton of volume that traded there. So it's no coincidence that when that failed, they jumped ship. Like, okay, wait a minute. Bad call. Get out of that one. This thing's going maybe higher. We've got some issues. We might be able to kind of reposition a little bit. So seeing it bounce there so aggressively, we can kind of see them hit the brakes a little bit. Maybe not everything, but jumping ship on some of the positions, accepting a loss partially on this move up, driving their average up, making their lives inherently a little bit easier. A lot of positioning is going on up here. So when this big dive back down shows supportiveness here, I mean, that's a clear sign that the bulls have a shot. Their objective is where things become troublesome, though, because everybody's going to be looking to do the same thing at the same place. Swing traders, scalpers, you name it. Take profit at the top. Sellers who are looking for counter trend moves, this is one of the largest pullbacks that we've had in a very long time. A lot of times when the market comes back to that, it's not unchallenged. It doesn't go without a fight. They try to push back. There'll be more sellers there even on the short side. So we know that when we get back up to these highs, 14,878, it's either got to blow the lid off this thing or it's going to potentially have a little bit of a struggle. And then over on the 15, as far as the 15 is concerned, one of the most obvious things that we did pull back to from a value perspective, given that we blew through POC here, we blew through it here. They were obviously hunting for something. Well, we know what they were hunting for. That obviously lined up with a lot of other things too. But really, really nice support that came in here. And this is where, when we were zoomed out, those sellers were coming in. That massive truck ton of volume, that was right here. Those sellers... they bailed. They're like, nah, nope, I don't want it. It's just kidding. I'm wrong. They bailed. So when you have that kind of decisive bounce, you know, that really does add a lot of context to the bulls here, even if the sellers try to get the first break. If they start rolling back up, you know, yellow flag, red flag, nope, get out. All of a sudden it turns into another V-bottom and it's off to the races. Looking in the short term, from the top to just the bottom first, the POC is up at 14,806. So it's a bit troublesome in terms of the POC because they're going to have to work through that. We already know up here is going to be a tough time. But if we drag this further forward, we do have the POC shift, which is kind of lined up in the middle. Also, a potential concern, given what bears usually do when the POC lands in the middle, they typically drive it back down again for another leg. So we're really on the balance point right now. Very, very potentially trappy this morning. We've got to be extra careful. There is a larger move that's attempting to build, whether it's up or down. Don't know yet. But there's some rumblings, right? The ground is shaking a little bit. You might want to seek shelter and tread lightly. Or be aggressive and be aggressive. Wait for the hot spots and just go nuts, you know? I mean, it's all up to your trade plan. We've got the open in about 8 minutes. Got a little bit of time left. Markets, for the most part, in the near term, were sideways. The Asian session, Euro session are stacked. Euro session's larger, no surprise there. As far as the rotation goes, sellers did try to get a move going to the downside. I'll include the high up here down to the lows just to see what they were able to do. Hey, how's it going, Ace? We've got the POC, which was stuck up at the top. So as far as that POC being up at the highs, I mean, if these were sellers, would they still be in that short? I mean, I doubt it. I mean, let's be real here. They had to risk what? This? If that was assuming that the POC is their average for like a 5-to-1 to the downside. It's going to be a tough time to convince me that those shorts are stuck. Nah, I don't think so. Instead, more likely when it comes back to that zone, instead of expecting it to act as resistance, you would expect it to act as support. Nobody's really going to defend it there anymore unless they want to re-up their position. And a bear bar didn't even show up. So, I mean, there's nothing there to work with unless they're blind selling into it. And if they did, they had their exit for break-evens right here, and bulls had their chance to try to take it. Now, the fact that the bulls had their chance to take it and they failed, you'll notice a little microstructure that happened up here, 3 lower highs. They broke down again. Now we've got what? Another lower high. Well, why would they lower high there? Interesting. Let's move this a little further forward. Where did that POC land once the market rotated down? Now things are starting to make a bit more sense. This looks like a range. It talks like a range. It is disguised like a range. But there's some bearish implications here. So that tells us that I would rather be on the short side than the long side. And I'm okay selling a little bit further down. Because we've got a bit more chance that it does push a little bit lower, at least for now. That also means that if I want to be a buyer, I'm not going to be buying the exact lows. I'm not going to be buying that doesn't make sense. You've got to buy the offsets, right? Because chances are the sellers are going to run through a little bit. Now, if we draw this all the way up to the next lower high, we can see that nothing changed, which is a very big clue because we know what happened now. They definitely exited there, and we have a reversal all the way back to the downside. Pretty straightforward stuff when you got the context. So that adds a lot of reasoning as to why sellers are still going to be totally happy hitting the sell button as we go into the open. Kratom short the ES. Still from yesterday? The same one that you were talking about? Or did you have to adjust? Great job either way. The most recent high in the NASDAQ, 755. Above that's quite a bit. I mean, it's only 14,800s. We start breaking above those highs. I mean, really 820s. What a mess. I tell you, though, what a absolutely picture-perfect megaphone low, huh? I mean, one for the textbooks. Holy cow. Just straight across. It's like, I mean, look at this. The algos were just having a heyday off of this. Incredible support off of the lows. The whole way down. I mean, you don't even have to draw the line. It's so obvious. Look at that. It's one of those, like, your mind naturally draws a line there. It's just crazy. If you're looking for a good example of a megaphone, this is one. If you like taking screenshots and all of that, this is one right there. That is almost perfect. Now, it is to be noted that within megaphone structures, with that in mind, within megaphone structures, one side will eventually break, right? And when that side breaks, there is usually at least a higher low or some form of a heads up that happens ahead of it. And it's usually after that third rotation where they start climbing their way up and then they start doing this. And the trend starts taking off back to the upside. Those lines turned out great. The same thing may be happening here to the upside. And that's why we're seeing this range bound a little bit. We've got sellers who know that they've got everything kind of in their path. Or not in their path, out of their path, rather. And the reward versus the risk is fantastic, especially for a massive, downturn. But the bulls also know that if they're buying down here, they have the same thing, right? They've got a really good reward versus risk, and they have the long-term trend in their favor. So both have a valid argument right now, which is why we're range bound. If we look at it from the very, very top through all of this range, everything, chances are in a range, the POC lands where? Right in the middle. So, I mean, we're in a range. That's where we are. Buy low, sell high, stay out of the middle. I mean, the POC is like, what, 10 points away? We're in the middle. 928's the next big time slot. See if the Bears want to keep this thing going. And here it sits. 928 really didn't do much. Get the larger POC out of the way. We already know the context here. So we've got up to that high. The impulse POC is smack in the middle. Obviously, that's a range. But we'll still keep track of it. From top to bottom, that POC was up there. We're back. They're pushing back down. If we draw from the bottom to the top, that POC was... actually, man, look at the volume that they put in there, though. It didn't change the POC. The POC was actually still back here, but that was a lot of volume they put in up there. Right on top of it. I mean, blatantly obvious. And now the market's driving down as we go into the open. POC kind of back in the middle. Which is, again, no surprise. We're in a range. Got 30 seconds or so until the open, right around the corner. Quick look across the board here. The S&P is pulling back off that ABCD to the upside. Nothing else is really in a zone of interest, although Bitcoin and Ethereum are attempting a move to the highs and getting that breakout move. Gold getting close to the bearish POC at 1806 if they want to get a rotation down. Euro session lows acting as a nice little zone of support. All right, POC shifting to the downside right at the open. Not really a surprise, a lot of volume trades at the open. But the fact that we're happening in a range, look where the POC is in the bigger picture. We're kind of hovering. It feels like the POC shifting lower, but look left. Where are we? We're dead center in the middle of the range. That's where all of the other POCs are too, before another leg. It doesn't make sense to be a buyer here, is what I'm saying. It makes a lot more sense to wait for that to fail and continue down. The majority of those failures, if you look at that failure move from the mid-weighted POC up, was about that big. The mid-weighted POC up was about that big. So, you know, give or take about that size. In terms of support, that would put support at around the 661s. Makes a lot more sense if I'm going to take a crack at it from a swing trader's perspective on a long, that you'd be looking at it from there. And if you're looking at a swing trader's perspective, remember, 2 to 1s or higher, that target fits where? Right back in the middle. Whoa! So from a swing trader's perspective, I don't know that I want to clog up the future side of things with this, but the swing trader's perspective, the 661s, that's going to be a big zone of interest. I'm going to leave this on here just so I don't lose sight of that, because that will be an area that a lot of traders will be willing to come in on. And actually, any area that puts a 2 to 1 inside of the top will likely find support. So the highest point, 664. Nice attempted rally back to the upside. Back to settlement. That did end up being a bottom-weighted POC. So when that happens, and they do actually prove themselves, the market typically wants to come back and treat it as support resistance. So realistically, a lot of buyers are going to be looking to buy here, but not necessarily exactly on 94, as we see up there. It's pretty sloppy. Maybe even a slide down through the lows would be viable. Unless this starts really breaking away, like it kind of is. But remember, when you're in a range, strong moves are faded, right? More complications. All right, here we sit. Oh, Ziggy, not right now, cat. It's trading time. Yeah, I know. Go lay somewhere, Your Highness. Freaking cats. I mean, I love them, don't get me wrong, but it's just, they're so high and mighty, you know? Gone for 5 seconds and a dog acts like you've been gone for half a century. A cat's like gone 5 years. He looks at you like, where you been? You got my food? Nice bullish continuation back to the upside. Small little consolidation here. We are right in the middle. Really bad place to be initiating trades here. This is where things get really, really messy. Although once it breaks away from here, it should be relatively decisive up to the next point of interest. Oh, jeez. What kind of candle did that turn out to be? Yikes. POC still waiting down at 14,694, and it still might be that mid-weighted POC. If we modify this a little further forward, it hasn't changed at all. Ooh, big bear bar move to the downside. Now watch how they respond around that. That POC shifted down really fast. That POC shifted down really fast. Potentially a lot of buyers are jumping ship here. We're back to that POC, closing underneath it. Getting a lot of volatility. Now we're in the middle. And it's starting to line up where sellers are looking for that continuation down. I love this area for a drive lower. Back up into the POC for the attempted move down. They were able to start closing back up against this, but the POC for the most part's at 695. As far as an objective to the downside goes, based off of continuation, that would park objectives back into potentially all the way down to like the 70s. Nice pop higher. I like this for a potential add point. Big flush down. Big flush down. I want to see if they rifle through this. Beautiful movement. There we go. Beautiful drive. We're in the middle. Let's see if they can get the continuation flush through the base. We're back under the POC again. POC shifting down. Uh-oh. Uh-oh. Come on. Blow off the low. POC shifting up with the market trying to pierce higher and no follow through. Sellers are dominating the buyers in the middle here. Let's see if they shift hands. Sellers continuing to follow through. More movement to the downside. Big bear bar. Euro session lows, maybe? Huge drive. Beautiful target. Woo! There we go. Fantastic drop. Now, follow through objectives, potentially a little bit further through. Remember, I'm on the scalp side. But if we can get more opportunities to jump back in, we've got more room. Big bull pop. I'm looking at this as potential weakness. I do not believe this bull pop at all. Oh, terrible fill. Hey, hang on, hang on. Okay. Beautiful drive back down again. Fantastic. Nice little session, Euro session retest. I was only able to grab one contract. Man. Beautiful continuation down. More follow through. Be careful, though, once we start getting down into these 665s. $665s, not 75s, NASDAQ. 65s. Come on, go back down now. More follow through back down. This is a huge... Look at the pocket of wicks that happened back here earlier this morning on the tick chart. This is a nasty zone. A lot of shorts are going to be looking to potentially start exiting profit targets down here, knowing that we're beginning to get down towards the lows of the range. Where's the POC on this move? Right back in the middle. Whoa, what a surprise, right? So you just got to wait for the transition to happen. It was low weighted for a little bit until it trapped them all out and ripped their face off. As far as swings, we are down into that zone. You know, it's a little above it, I guess, but we're in that hot spot. I haven't even had a chance to do the 5-minute volume yet. Jeez. Although it might not matter, I guess, huh? Yeah, that definitely might not matter. Wow, that's way up there. 7:15. So swings will be looking for long continuations from here. It pushed down into that area. See if the bulls want to show up to the party with more continuation. Or if the bears are going to take this. Out of curiosity, why do you have the ES-RTH session on the right side for when you're trading the NASDAQ? First off, I love knowing what the S&P is doing. That's kind of like the granddaddy market. So having an idea of what the S&P is doing regardless, if you're trading indexes, is a good idea. But that aside, I will occasionally throw scalps on the S&P as well, if they show up in a way that I like, I guess is the best way to put it. I am almost always scalping the S&P, though, not swing trading. As an example, a lot of times at the open, the NASDAQ and the S&P will diverge from one another, which makes sense. The NASDAQ has a lot more volatility in it because it's based in tech. Right? We already know tech is pretty volatile. So they diverge away from each other for the majority of the morning, but then they'll start coming into parity. That might be the S&P following the NASDAQ. It might be the NASDAQ following the S&P. But there's usually an opportunity every day based on that divergence. Somewhat. Now I can't say every day, I guess, but... What are the white chart settings for the ES? CME US Index Futures RTH. Yeah, exactly. Well, I mean, that's the goal, right? We've got bulls attempting to come in. We can already kind of see they've got a solid reason as to why they would want to come in. We just haven't seen the follow through. The first thing that we've got to see in order for the bulls to come in successfully is the sellers have to get out of the way. I'm not too worried about the POC because we know we're in a range, and a lot of times the POC ends up in the middle of a range, which, that was the entire reason why we were building into shorts there, looking for a continuation down. And, well, it's doing it. But if it starts chopping back above it, then that concern of, wait a minute, this just double bottomed, basically, at 68. The previous low was 67.75, so technically it's still a higher low. That would be the third higher low in this sequence from this morning. That's a really bullish indication. So now the next question is this that wedge low trap that we were talking about before the bulls just rip the Band-Aid off and we go screaming all the way back up to all-time highs? That's kind of what's floating in the back of my head right now. Depending on that, that POC rejection to 94.75 is a bit rough. The bulls may still want to try to get continuation up given the context here with this failure. Oof. Big flush underneath the lows. Heavy drive down. We're back to the swing lows down here, and I like this area for a potential return back up to the inside swings. See if they can jump back up into the 88 quarters. But remember, we're going against a potential dominant trend to the downside. We're just at the range lows, and it lines up so nicely for a jerk back up to the highs that I have a really hard time not wanting to at least get something going there. Yep. Nice little poke. It just makes sense. Now, I'm not looking to hang on to it forever, like a quick 10, 15, whatever, quick little jump, but I mean, look where we are in the bigger picture. I don't mind holding on to those potential longs, given that we are maybe at the lows of a launching pad. But if it's not going to show up to the party, I'm not hanging out. No thanks. I'm good. Give me another reason, and then maybe. Jeez, those candles are starting to gap from close to open now. That was, holy crap, that last bull bar closed at 85.75. The next one opened at 86.75. That was a full point gap. Wow. All right, well, the bulls are coming in with some serious steam here. That's a huge potential reversal attempt, at least. Again, we already know swing longs are in this. It would be ridiculous for swing longs to not be in this off of those lows. But from a scalper's perspective, now that we've got a bit more follow through and more proof, we're breaking above the POCs, we're breaking, everything. It makes a lot of sense. What's the S&P all-time high number? Get your paw off the enter key, you freaking cat. Now I'm on gold. What are you doing to my charts, man? 43.53 quarter? Yeah, 43.53 quarter. Big break above the POC. Man, they did end up taking it back to the upside, but they herky-jerked me out of that one. Yeah, that sucks. Oh, well. I mean, it was a nice trade, but Talk about a whippy little flip kind of garbage that they did there. Before like 100 tick rally. It's all good. Salt in the wound. Whatever. Going on 9:45. The next news announcement's not till 11 o'clock, so we don't have anything to worry about from that. Man, there's still a chance that the bears take it down again. I mean, I would agree. I do think there's a bear case for another leg lower, but there's also a case for a bull leg higher. I think both have equal arguments, and so far none of them have been stopped out, really. I mean, at least decisively. So, I mean, it could still go both ways. It's right back in the middle of the range. Although it did just come off of a potential trap on the lows. More likely that we push bullish through this range now in the middle. I don't know. I don't, for whatever reason, I'm still having a really hard time wanting to be bullish for too long. This just isn't, I'm not seeing enough proof for me to really want to go nuts on longs right now. At least here. I mean, down at the bottom, sure, from swings like we were talking about, definitely. But from a scalp perspective, we're just not seeing that transition yet. That was a nice rally up, and then they gave the whole thing up, and they didn't even trigger above a bull bar. Like, what? Where are they? They're trying to make it look like they're there, but when are they going to show up for real? Bull's trying to get something going here. Maybe. Depends on how they close this, I guess. Okay, very nice bull bar back up. That's a great indication that this impulse POC back in the middle that they're crossing above is starting to break. They're starting to put some kinks in the armor, right? They've got issues. Longs are starting to potentially re-up their positions, maybe even taking on a bit of additional risk by drawing their averages up if they're long from the lows. That's a very aggressive stance to take. From a scalper's perspective, we are seeing a bit more follow-through. I would like to see maybe a little bit more. Okay, ask and you shall receive. Jeez, oh Pete. Okay. Well, there you go. Holy cow. All in one, right? Nice bull breakout on the S&P. As far as the first 5-minute POC, for how much it's actually going to be useful, 32.25. Maybe it'll be useful later in the day. All right, now we've got some really, really good proof to the upside. This is another higher low, proven higher low by 1 tick, but it's proven. Bulls have a shot here. We're rotating above the impulse POC. This is the kind of stuff they need to take this further up. And sellers know it. They are bailing. Sellers are jumping ship hard. It's going to feel like, wait a minute, why would I buy at the top of a range? Well, realistically, the context is telling us that the sellers are potentially realizing they are underwater in a really bad way. So a nice little washout, a nice strong pullback, something like that could be incredibly useful for scalpers to use. Like that. Nice little flush back down to settlement. And a bull rally back up. Okay. Apparently everybody did the same thing. Holy crap. That thing just slapped back down again. More continuation back down. Might have to wait for something a bit more obvious now. The short-term scalpers obviously had their way with it. Looking at the S&P, and this is going back to your question, Steve, the S&P is continuing back up through highs. That's going to have a natural inclination to want to suck the NASDAQ back to the upside. We've kind of had our morning deviation. They kind of got away from things, and it's going to have a kind of undertow to it, right? It's creating this drag. Don't let that skew your opinion, though. You still have to realize that the NASDAQ and the S&P are separate markets. Some people have really hard times separating things like that. If that's the case, then just close the S&P market and disregard it. But for me, this would tell me that even though this pullback is starting to stack up, given the context that we've already built on the NASDAQ alone, taking that information and going to the S&P, that would tell me that that's adding a bit of drag, right? It's trying to suck the market up. It's creating a bit of an undertow right now. It doesn't mean it's going to be successful, right? But that's where context and finding the right location come in. Nice pullback. Got about 8 minutes until we hit 10 o'clock. Feel free to get those questions in, and then we'll shift over into the extended session for VIPs and extended session members on YouTube. Don't forget, before everyone starts ducking out as well, we have done one of the 4 giveaways on our road to the 2,000 subscriber mark. If you haven't posted your comment in the giveaway video to get into that raffle, make sure to get into that, because we've got 3 more to go on our way up to the 2,000 subscriber mark, and everybody can win something. So make sure to subscribe, like the video, comment, and make sure if you want to get in the giveaway video, obviously you're going to want to comment on that specific video. But we've already got 1 winner. 3 more to go. $14,705 is retesting now with the POC shifting back up. My concern here is that we've got a POC at 705, and that might be in the middle. In the middle of what? A larger move usually. And at the moment, we just cycled off the lows. So commonsensically, at least, if that's even a word, that would tell us that the easier move, and I use that easy word lightly, would be to the upside. The path of least resistance, I think, would be the better way to put it. Doesn't mean it's going to feel easier. If they are going to shift to the upside, utilizing that volume node in the middle would give us an upside target back up to the highs at around 743.50 at the moment, given the current market climate. Right back up to the high, basically. Bulls continuing back up, running into the wall of resistance at 14,715. And breaking through it. Very nice continuation to the upside. Is gold nearing the POC that we were talking about? Okay, yeah. It hasn't done much, though, huh? Jeez. This is where sellers have to hold it. I mean, it's very much a swing setup, but that allows downside objectives. I mean, 2 to 1. You can get way more than that. Probably 4 to 1 to the downside. So from a swing trader's perspective, on the short side, there's a lot of potential opportunity there. Big time. Big pullback on the NASDAQ. Now, if you're looking at it from the other side, maybe you want to be a bull on gold. That would tell you to wait, right? So the nice thing about that is, even though we know that it's from the sell side, we can still use that information to our advantage, even if you were only a perma bull on gold and nothing else. If there's reasons to sell, well, then that means there's no reason to buy. Right? Within reason, obviously. Give me enough time and I'll find a reason for any trade at any point. You know, I mean, you can overanalyze anything. Got a doji potential pause, I guess. I don't know. I mean, we're right back in the middle. Someone's going to lose in order for us to make money. Well, not necessarily. I mean, it is a zero-sum game in the sense of one in, one out. But I like to try to think of it in a positive light. At least, I mean, I am a little bit masochistic, I guess. But like maybe it's their profit target and it's my entry. You know, like. I feel like the market hardens us. You know, like nah, that's probably not it. Someone lost. Got the bulls attempting to climb up here, but honestly, I think the bulls lost a lot of ground. This is a bit challenging here. I'm going to see if we can get a continuation back to the downside for a short-term move. I'm not looking for a huge move by any means, but potentially down to like the 98.50s or so, maybe even a little bit further. There we go. Nice little push. Very nice. Just a quick little scalp again. We're in the middle of the range. I have no business trying to initiate swing trades in here, which is why I'm exiting these so quickly. And you're seeing the response why I don't stay in these for very long. It's, you know, I mean, realistically, I have no business doing anything other than scalping in the middle of a range. Yeah, exactly. A la maybe AMC or some of these other ones. I like that. What's the latest one? I heard rumblings of a new meme stock. I thought I had like G's in the symbol. I can't remember what. I don't remember. I'm a little out of the stock side of things when it comes to penny stocks. It's not my shtick. Sometimes I'll jump into it every once in a while. Well, I guess to be fair, AMC and Wish aren't penny stocks anymore, huh? Yeah, there's GameStop there. I don't know. Whatever. Another cycle back to the downside. More continuation lower. Inside POC holds off of 705, following through a bit more, but again, we're right in the middle of the range. S&P is definitely having a really nice run to the upside. That's adding to that gravity. I mean, it's kind of like escape velocity, where the S&P is just kind of running away, and the Nasdaq's like, wait a minute. Hold on a second. The hope for bulls, at least in that case, would be that it plays catch up and it goes screaming way up to the highs. The hope for the bears, obviously, is that the bulls are wrong and they start jumping ship on a stop run and it dives lower. Going into 10 o'clock right around the corner here. Ever trade the RTY? I've dabbled in the Russell on and off, but it's definitely not a market that I really focus on, and it hasn't been for years and years and years. Back in the day when it was the TF, that one I would trade, but nah, not really. If I want to, in my mindset, and there's nothing wrong with the RTY, I want to throw that out there immediately. There's absolutely nothing wrong with it. It's a great market. But if I'm going to go into and adding another market, I mean, I've already got the NASDAQ. I've already got all of these other ones. As far as the indices go, I've kind of got it covered. And if I want to look at high risk, more aggressive stuff, I would rather look at the individual stocks. They're more, for total honesty, it's just more fun. It's more of a thrill if I'm going to have to add another market than anything else. So again, there's nothing wrong with it. It's just I've already got plenty of markets going on that move still. I don't really have a reason to deviate away from them yet. If things change, who knows? Maybe the TF or the RTY will come back into style. We are going into 10 o'clock, so let me answer these questions real quick here. About to ask, what's the difference between the RTY and the TF? I used to trade the TF way back too. So if you remember, the TF, the old school Russell, they got kicked out. They got kicked out, and with that they wanted to try to get back in, and the only way to make a long story short, I mean, you can read into it. It's a really kind of entertaining story. But to make a long story short, they were able to get back in, but with a new name, RTY, shifting the way that they tick. So instead of $10 a tick on the TF, the RTY is $5 a tick. It's been modified, which I think is fair given the high risk nature of the Russell in general. I feel like it should have always been $5 a tick, but whatever. I think the DAX shouldn't be that expensive either, back in the day at least. So it's a little bit cheaper now. It's still, it's still the Russell, I guess, but yeah, seeing a market get kicked, it doesn't give me the warm fuzzies, really. It moves crazy fast at times, and it seems more random like now. Yeah, for sure. And those ballistic up and down moves, that would be inherent due to its nature, right? It's based on small caps and all of those, and well, that's where the fun stuff happens. You just got to be really sure of your entry positions. The nice thing is, with those types of things, and this goes for penny stocks as well, if you're right, you're usually right a lot. Like you're and not like frequency, I mean like amount. Like the amount that's right is significant for how much you have to risk. So the downside on them is nice. Because you don't have to risk that much. When you're wrong, you're wrong, you can just, pull the plug. Which is a nice feature. It's definitely more, I would categorize it more on the swing traders market myself. Zooming out, I think you're going to have a better time. Although I'm sure you could scalp it, it'd just be a little wild. Anyway, we're past 10 o'clock. I think I got all the questions taken care of, but if I didn't, feel free to shoot me an email and I'll get the rest of those covered up. Again, don't forget to check out the giveaway video. We're going to be going into the weekend. I might record another one over the weekend. I'm not sure how I want to approach it, or maybe I'll wait for certain subscriber marks. Maybe at like 1950. We'll break into 25s. So subscribe. Tell your friends to subscribe. Tell everybody else to subscribe. Get that going because I want to do the next giveaway. So let's go. I'm excited. Don't make me wait. Otherwise, though, enjoy the rest of the day. Have a great weekend. I hope you had a fantastic week of trading. And we will see you all back on Monday, all right? For the rest of you who are hanging out with me in the VIP session and the extended session, I'll post the extended session in the Discord chat just to make it easier for y'all. But I'll see you in a little bit. You can listen to me talk to myself. For the rest of you, again, enjoy, rest up, and we'll see you back on Monday. Have a good one. We'll talk to y'all later. Thanks.